Today on Fear and Greed, global financial markets are on edge ahead of the inauguration of Donald Trump tomorrow morning Australian time. News that two of the world's biggest mining companies, Rio Tinto and Glencore, were in merger talks brightens the spotlight on copper, and TikTok goes dark in the United States. Plus, the Hamas Israel ceasefire comes into effect, and NFTs, remember them, non-fungible tokens, well, they're going backwards in value. Welcome to Fear and Greed Daily Business News for people who make their own decisions. It is Monday, the 20th of January, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, big week this week. The main story this morning, Donald Trump is set to become the President of the United States for the second time, putting investment markets on edge, really on the back of enormous uncertainty around economic and political settings.
The inauguration is scheduled for tomorrow morning Australian time. He'll raise his right hand, take the oath of office. He officially gets the gig at noon Washington time, which is a couple of hours later. He was the 45th president. So does he become the 47th president? I'm not sure, actually. So I presume Joe Biden's the 46th president. So do you get like 45 and 47? Not sure.
You'd have to reprint
Michael.
All of the stationery.
Yeah, you would.
It's got a 45 and a 47 next to it. But that's probably, in the scale of things, probably relatively minor.
Well, it is, because many of his policies are very extreme in nature. Massive deportation of people living in the US illegally, big immediate tariffs, policy announcements on social media, which may or may not occur. AMP's Shane Oliver did some work on this over the past week. He says that the policy agenda is somewhat schizophrenic for investment markets. There's good news, tax cuts to regulation, and bad news, tariffs and immigration. We're likely to see a bunch of announcements early on, even within the first 24 hours. Immigration restrictions, maybe energy deregulation, that'll going to run early on, financial deregulation. You're going to hear a lot about crypto earlier on, the federal workforce tariffs, that sort of stuff. What's it mean for Australia? We don't actually sell a lot of stuff to the US, so that's potentially good news in terms of tariffs. About 4% of our exports go to the US. The tariffs won't have much of a direct impact on us, but if they cause a global slowdown, a Chinese slowdown, that will certainly hit us. The US dollar has risen since Trump won. That's hurt the Aussie dollar, so those of us going overseas. Those of you, not me, Michael, perhaps you going overseas at some point are going to feel the pain of that. Broadly, though, it shouldn't affect our economy directly too much, but it certainly hits financial markets.
All right, and it's the flow-on effects then for us. And an interesting take on all of this today, Sean. Stick around after the show. We've got Fear and Greed the week ahead with our resident economist, Stephen Koukoulas. And really the focus of the conversation today is about the economic impact of Donald Trump's inauguration.
Exactly. There's not a lot going on in the world of economics this week. A huge week next week with inflation figures. So we talked to Stephen all about what Donald Trump means for the global economy.
Briefly on the inauguration, it's set to shift indoors, ostensibly because of it's frigid weather, isn't it, in Washington, D.C. You wouldn't want to be outdoors for this.
You wouldn't. And I bet security guys are breathing a sigh of relief.
Oh, yeah.
We're talking about 20,000 people rather than 250,000 people. Donald Trump will be sworn inside the Capitol building. He'll then host a modified inaugural parade in Capital One Arena, one of the big sports arenas in Washington. On the day, there'll be about 25,000 police, federal law enforcement and military personnel from 40 states as part of the security team. Quite amazing. There was an anti-Trump protest that marched past the White House over the weekend. Organisers said 50,000. Law enforcement authorities said about 25,000 people. Not a huge rally, but that did take place. But, hopefully, and we have no indications otherwise, hopefully it will be a peaceful transitioning of power this time.
Yeah. All right, moving away now from politics, Sean, news that two of the biggest mining companies in the world, Australia's Rio Tinto and Swiss-headquartered Glencore, had been discussing a potential merger between the two, has really put the focus very much on copper.
Yeah, it's fascinating this. So the two were talking last year, though it seems, according to media reports, that those talks are not currently active. If it went ahead, right, so it's not dead. but it's not active at the moment. If it went ahead, it would be the mining industry's biggest deal ever. Rio's the second biggest miner in the world, valued at $105 billion US. Glencore's worth about $55 billion. You put that together, $160 billion. That would make them the world's largest miner, ahead of BHP, currently number one. That's worth $130 billion US. Both Glencore and Rio own some of the best copper mines in the world. Glencore produces about 1 million tonnes of copper. Rio's about 800,000 tonnes a year. Remember last year, BHP chased Anglo American, mostly for its copper assets. What is really fascinating at the moment in the world of resources, iron ore was everything in the last decade, mostly because China was building hand over fist. Now, that's stopped somewhat, certainly slowed. Construction in China has slowed. Iron ore is slightly passé. Copper is the go. Of course, copper is central to the electrification process. So in terms of renewing or changing the basis of energy globally to renewables, you need plenty of copper. So that's why everyone wants copper. Australia doesn't actually have that much copper. We've got Olympic Dam in South Australia. That's huge. But the really big deposits are in South America, parts of Africa, Mongolia. The US has large amounts of copper. What I think is really fascinating about this, not just the takeover activity, whether Rio and Glencore will ever get together, but where does Australia sit in the resources world? We have been the king, really, because of iron ore. But now copper is becoming the hottest commodity, and we just don't have a lot of copper. So we'll have to really rethink how our mining industry over the next decade or so.
And so can iron ore make a comeback then, or is that really just entirely dependent on China and whether economic activity there picks up, construction there picks up? We're really kind of dependent on one country.
In the short term, that's right. In the longer term, places like Indonesia need huge amounts of infrastructure. So it's not like iron ore isn't a commodity for the future. There will still be great demand for it. It's just at the moment, because the construction industry in China is so weak, it's really come off the boil and everyone wants copper. Now, at the end of the day, when you've got BHP, Glencore, Rio chasing copper, I'm betting that's the commodity of the future rather than iron ore.
Fascinating. All right, Sean, we've still got plenty still to cover. We're talking the calls to drop credit card surcharges. We've got an update, surprise, surprise, on Star Entertainment. Seems to be one of those every day. TikTok going dark. So much still to cover. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has called for action, not meetings, to combat the escalating anti-Semitism across the country just ahead of the ceasefire between Israel and Hamas.
On Friday, cars were torched and vandalised in Sydney's eastern suburbs. The former home of high-profile Jewish advocate Alex Richin was doused with red paint. Now, Anthony Albanese and New South Wales Premier Chris Minns yesterday came out and said that federal and state action will be taken to clamp down on anti-Semitism. This was all happening as the Israeli parliament finally passed the ceasefire agreement with Hamas. Prime Minister Benjamin Netanyahu has agreed to the deal. It's in effect as we speak. It comes after 15 months of hostility. There are still 98 hostages being held in Hamas, Israeli people in Hamas. We're getting some of those hostages will return home. There'll also be some political prisoners in Israel going back to Palestine. Mr. Netanyahu, over the weekend, they warned that he was ready to go back to war if negotiations for the second phase of the ceasefire collapse. So it is a very, very volatile situation. The ceasefire seems to be holding, which, I mean, it's only within hours now. We'll see what happens over the next few days. But it's promising, Michael, but, in all these things, there just seems to be so much diplomacy and posturing and stuff like that.
And a lot of potential for things still to go wrong, unfortunately.
Absolutely. I mean, in fact, part of the Netanyahu government resigned over the weekend, the far-right faction of his government. Now, he still holds a majority, but it's only 2 seats now, and so that makes it very difficult for him to govern.
Yeah. Now, Sean, I mentioned this one before. The Commonwealth Bank has called on the Reserve Bank to drop surcharges on credit and debit card payments.
I think this is quite an interesting little story. So the Reserve Bank's looking into surcharges and the payment system more generally. It calls for submissions. Treasurer Jim Chalmers has already said he wants to dump debit card surcharges from next year, subject to the Reserve Bank agreeing. So what we're really talking about are credit cards. Now, the Commonwealth Bank came out and in its submission to the inquiry said, let's just dump all surcharges. It's been done in the UK. It's been done in Europe. It's just much simpler. So when you tap your card, you won't, if it's $23.50, it's not actually $23.67, it's $23.50. You don't have to pay that extra 17 cents. Australians pay about $1 billion in surcharges. Now, MasterCard and Visa card, not surprisingly, agree with Commonwealth Bank. They don't want any of these surcharges. Westpac agrees with the ban on debit card surcharges, but not necessarily credit card surcharges, according to the Fin Review. The interesting thing about this, lots interesting about this.
Lots of things, Sean.
The idea of surcharges, they were designed in the 1990s mostly to push customers away from more expensive credit cards in favour of debit cards and EFTPOS. Debit cards and EFTPOS facilitate much cheaper transactions. I don't know about you. I seldom use a credit card now. I always use a debit card, but previously I always used credit cards. So it's kind of worked. It improves transparency. But whether or not they have to be called out, not so sure.
I note that not all businesses are certainly supporting the shift away from surcharges. I was reading over the weekend about Qantas and Virgin, for instance. The airlines are certainly opposed to them being dropped and basically said that, hey, this might actually result in higher airfares because we won't be able to single out people using kind of credit cards to put a surcharge anymore. It may end up that the processing fees need to be incorporated into everybody's fares now, which would then see an increase. And obviously that's their stance on it, and it may not actually be the way that it plays out. But there certainly is there are plenty of opinions in this debate, Sean.
Yes, and I actually think that's probably true because I think prices will go up slightly to cover for the charges.
Yeah, indeed. Now, I promised an update on Star Entertainment. The group has once again asked the New South Wales and Queensland government for tax relief, Sean, as it teeters on the edge of collapse.
Went through $50 million over the last month, hasn't got much left in the bank. It has called in restructuring experts. That's ahead of going into administration. Now, I'm not saying it is going into administration, but it's sort of the step before that is to get some restructuring experts in. It's also sought safe harbour provision for directors. What that means is that directors get protection should it end up trading insolvent. It's a process which basically allows the directors, particularly the CEO, to run the business without fear of prosecution. New South Wales and Queensland governments have previously said no to tax concessions. There is no sign that they're going to give any. It really is the final few weeks, well, not the final few weeks for Star Entertainment, but when's a few weeks, not D-Day, but, D weeks, W weeks, whatever it is, for Star Entertainment.
Yeah, the clock is certainly ticking.
That's
Sean.
it.
There are a couple of updates this morning on takeover battles. The first, AV Jennings, has opened its books to Singaporean. This is one of those ones, Sean, that I have always stumbled over. A company from Singapore.
There you go.
A suitor from Singapore, Hobie Land.
Okay, so AV Jennings previously opened its books to Proprian Capital Partners. They did due diligence. They've offered 67 cents a share. That was back in November. The Hobie Land has now made a 70 cent a share bid. It's now going into due diligence. The AV Jennings share price itself is 72 cents. That suggests investors think there's another bid on the way.
And CC Capital has upped its bid for Insignia Financial to $4.60 a share. That's up from $4.30.
Yes, that bid is now worth more than $3 billion. The other bidder is Bain Capital at $2.9 billion. Insignia's share price is now $4.43. Still a few hoops around Foreign Investment Review Board and stuff like that, but the battle is certainly on.
Hey, Sean, when we talked a lot about last year, the Sigma Healthcare Chemist Warehouse deal, it was a big deal, got a lot of attention last year. Where's that one up to?
Well, it's the big one really that will kick the year off. It's worth $5.8 billion. Most approvals have been processed, including the ACCC. It's right to go to shareholders, and that actually happens next week, the 29th of January. Seems to have the backing of major shareholders and proxy firms, so it should get go ahead. When it lists, it will become a top 20 stock immediately. What's interesting about that is there's a bunch of passive fund managers, people who just follow the market. They'll have to buy into Sigma to ensure that they've got a weighting of Sigma/Chemist Warehouse in their funds. Now, officially, Sigma is taking over Chemist Warehouse, notwithstanding that Chemist Warehouse is miles bigger than Sigma. But you're going to see that pressure on that share price to rise as a result.
Just quickly, Sean, local markets, how did they finish up on Friday?
With a whimper, Michael, with a whimper. The S&P ASX 200 closed down just a touch to 8,310 points. Industrials did best. Financials and telco, there you go. That's my Singaporean word.
That's your Singaporean. Yep.
Financials and telcos did worst. Not really much of a day. Among the large caps, the banks were sold off, having had a pretty good week previously. Commonwealth Bank, National Australia Bank, Westpac, ANZ were all down around 1.5%. BHP, Fortescue Metals both ended higher. Some of the tech stocks, WiseTech Global, REA, Pro Medicus ended lower, while the retailers were mixed.
International markets, what's happening there?
There was a decent rebound over the weekend. The S&P 500 is trading just under 6,000 points. Basically, it's up a little over 2% so far this year. Wall Street is closed tonight for Martin Luther King Day, also the swearing in of Donald Trump, of course. Very busy week otherwise. Apart from Donald Trump and whatever he says in the next 72 hours or so, we've got the December quarter earnings announcements, starting with Netflix on Wednesday, our time. So it's a very interesting week for Wall Street. Also, before we leave global markets, the IMF, International Monetary Fund, revised up its global growth forecast over the weekend. It thinks the growth in the growth. I'm struggling this morning, Michael. It thinks economic growth around the world will average 3.3% this year, up from 3.2%.
It really wasn't that hard, was it?
No, it wasn't really.
You made it a lot more difficult than it needed to be. After the show, Sean, just a brief mention of the interview that you have coming up, because it is related to markets. You're speaking with Matthew Kidman from Centennial Asset Management.
All about asset allocation. We don't talk anywhere near enough about asset allocation. Asset allocation is where you put your money. Do you put it in cash? Do you put it in bonds? Do you put it in local equities, international equities? Do you put it in private equity? Blah, blah, blah. Where you put your money has a huge determination on your long-term returns. And so while we talk about shares all the time, maybe we should be talking about asset allocation a lot more. And that's what we're doing this morning with Matthew Kidman.
Yeah, it's a good one. It's coming up after the show and after Fear and Greed the week ahead. What about this asset, Sean? Non-fungible tokens or NFTs in 2024 had their worst year for trading volumes and sales since the COVID pandemic.
And that really was the beginning of NFTs, so the worst year ever. Sales of digital collectibles last year fell 18%. Volumes were down about 19%. That is according to blockchain analytics platform DappRadar, DAPPRADAR. Now, NFTs, mostly a creation of the pandemic. They're unique digital signatures that can be attached to an image or a piece of footage or a tweet or something. Remember the Jack Dorsey's first tweet. Jack Dorsey founded Twitter. His first tweet, the NFT of that, sold for $2.9 million in about 2022, I think. That was the year that demand really peaked. Sales are worth about $57 billion. Prices collapsed in 2023. Cryptos have recovered. NFTs haven't. It'd be interesting to see what happens with Donald Trump in power. I'm not quite sure. Certainly cryptos will get benefit from it, but I never quite understood NFTs, to be honest. And I don't really understand crypto either, for that matter. But
crypto, it feels like more logic behind it in many cases, whereas NFTs have always felt a little bit like a novelty.
Yeah,
and I do struggle to understand kind of the value of a lot of these things.
Yeah, so do I.
Anyway, let's turn to international news briefly, Sean. Big story: TikTok stopped working in the United States overnight and disappeared from the Apple and Google app stores ahead of the beginning of a law that requires the shutdown of the app.
TikTok is Chinese owned. It put up a message yesterday saying, I quote, a law banning TikTok has been enacted in the US. Unfortunately, that means you can't use TikTok for now. So if you were trying to log on from the US onto TikTok yesterday, as opposed to TikTok, You couldn't. The message continued, "We are fortunate that President Trump has indicated that he will work with us on a solution to reinstate TikTok once he takes office." This is all about a decision from Congress last year that ended up in the Supreme Court. Last week, the Supreme Court upheld the law that requires ByteDance, the Chinese-owned, to sell TikTok or face a nationwide ban. It hasn't sold, doesn't want to sell, therefore it's facing a nationwide ban. Behind the case are fears that the platform could be used for espionage or to spread propaganda. Donald Trump over the weekend said he would most likely give TikTok a 90-day reprieve. Donald Trump and Xi Jinping spoke over the weekend ahead of the inauguration tomorrow. They discussed the issue in the call, so we'll find out more in the next 24 hours or so.
Indeed. All right, big start to the week. Coming up next is Fear and Greed, the week ahead, featuring resident economist Stephen Koukoulas, followed by Matthew Kidman from Centennial Asset Management, talking all about asset allocation. So plenty of good listening coming up on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 20th of January, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, Facebook, and yes, still on TikTok. I'm Michael Thompson, and that was Fear and Greed. Have a great day.